Good day everyone, Ali's here from Safi Financial Network. Today is May 9, 2022. Alright, so we had a very ugly sell-off last week, and also it had followed through another sell-off today. Just Nasdaq went down 4%. Before starting to look at the S&P 500, I just want to show you something pretty interesting. This is put call ratio, PCC, and it gives us a kind of metric that how many put options are people taking into the action or trade versus the call option. Well, if you don't know, the put option means you're going to short the market and you're betting for the downtrend. If you're using call option, or if you're trading call option, means that you are kind of bullish and you are going for long. And the ratio of this shows that the number of bear divided by number of bulls in the market, basically. And as you see here, this is contrary indicator. I just want to compare it against S&P 500. And if you see S&P 500, this gives us a very nice metric that see where are we at. So I just want to right there. So if you see, when this one spike up, we are kind of at the low in the stock market. This is COVID crash, spike up all the way to here, and we are at the bottom, right? So it means that people are taking more put options when we are at the low. So basically means people are panicking when we are at low. And right now, this one is going down. Market is giving us a sign of bear market just because this is high, this is low, this is lower high and lower low. So this is basically a sign of bear market. However, we are very oversold, and it's going to be due for another bounce. But I'm not sure if this is a bounce to end up the bear market, or we are going to see another lower high and probably going down for lower low. But however, taking a short position right now, it's kind of like a risky, just because based on this indicator, as you see here, when we are getting there, even during bear market, when we are getting to the oversold condition, people are taking more action on the put side or on the short side, and that's how market is going to rebound, or we can see a bounce in the market. So this is a nice double top formation in put call ratio. Probably this one can go higher. However, I just want to show you this is not the end of the story. If we go back all the way down to 2008, as you see here, this is a 2008, and this is the number of put options going all the way up to the roof, and that was January 2010. And even below that in 2009, just prior to that one, you see the number of the put options actually are not that high. Even 2008 top was the number of put options are more compared to the bottom. But if we are just going forward, you will see whenever we have this bottom here, so the number of put options are going up. When we have this bottom here in 2015, the number of put options are going higher. When we have this one, February 2016, the number of put options are going higher as well. So this is kind of like, as I said, contrary indicator that shows the sentiment inside the market. So when we are at the bottom, the number of put options are high. When we are at the top, the number of call options are high. So this is bearish, this is bullish, and right now we are at a reading a bullish again. Sentiment goes back to the bullish, but again, how far we can go down, I don't know. Let's go to the chart, and based on the technical analysis, we can just provide some certain levels that we can just nail in for the support area. Okay, here's the S&P 500 monthly chart. And as you see here, we are going down close the months of the May so far. We are not at the end of the month, but this is very high probable that we are getting close and below this line, which is SMA 20 on the month of May, and we are going to this level, which is 38.30 or 39.71. Right now we are at 39.71, below 4,000 psychological level, which is very, very important level. And still we are at the future market, and you will see the selling pressure is very, very high. So I would expect another sell-off tomorrow, probably Tuesday, market coming down to this box, which I think that's going to be a support for a bounce. Again, I'm not calling for a melt up right now. We are going down, and we should just to see these downside targets, and any bounce back, any coming back up, that's going to be, I would say, selling opportunity, not buying opportunity for traders. However, for investors, that is going to be buying opportunity to just average down here in these levels, just because no one can nail the bottom. But we are going to see a major bear market probably after breaking down this trend line, and we are staying below this trend line, so that would be a major bear market. However, I just want to show you something in Nasdaq. When we are getting to the Nasdaq chart, we already broke that line. So in Nasdaq, we are already into bear market. So here is the weekly chart for S&P 500. So weekly chart, we are getting close, or we are kind of closing below 100 SMA on the weekly chart. And this week is not ended yet, so we just started this week. This is a trend line, this is a wedge, and if we get close below this, if we close below 4,000, I would say just keep an eye on Friday close, because if Friday close gets below 4,000, that would be a major I would say major downside target for the S&P is going to lighten up, and that would be 36.97, which is 3,700 inside this wide range bar, and that would be kind of like a 200 point, more than 200 point, around 250 point downside target for S&P, and that goes all the way down to here, which is going back to February 2021, which is exactly more than a year ago. So that is not a good sign for S&P at all. Selling pressure in futures market, as you see, it's just picked up. RSI goes to oversold area, and we are getting close to the oversold area, pretty close to COVID crash. And COVID crash, we went just below oversold area weekly chart, and the stochastic at the same time goes down to the bearish momentum. Stochastic goes there to the bearish momentum, which is going to be reversal pretty sharply going up if reversal happens. But again, inside the bear market, if we are inside the bear market, then this can stays there for a long time. As you see here, if it stays here in the overbought area for a long time, because we were at bull market, but right now we are getting close to here. I'm not sure if we are in bear market or not, just because indicators, I mean not the technical indicators, the chart pattern doesn't show me bear market. This is just a correction for higher time frame. However, we are getting close to break down all the support and getting to the bear market as well. So this corrective move so far is just an indication of the bear market. This is not a confirmation of the bear market. The confirmation of the bear market is getting close, as I said, the monthly chart below that trend line and stays below that one as well. Okay, so going back to daily chart, here is the daily chart for S&P 500. As you see here, we are breaking through this area, so that would be very, very important psychological level for S&P 500. We are trading below 4,000 now, 39.72. That is the area that is very important for S&P 500. So the next level for S&P 500 based on daily chart is going to be 38.25 to 3900. So this area would be a bounce, and as you see here, there are tons of supports here. and this is again going back to March, April 2021, which is more than a year ago. All right, let's go to NASDAQ, the other important index. Here's the NASDAQ. Okay, let's go to the monthly chart. I want to show you something pretty interesting. If you remember last analysis, which is going back to the last week, I told you exactly this is a very, very important level for NASDAQ. If we break through and we just almost breaking through this yellow line as well just today, just right now, future market. Still, we are not closing a monthly chart, but this is a pretty nice downside move, I would say, technically. As you see here, two shadows here, one engulfing, getting close below this, just a pullback and then coming down. So probably we are going to see sharp sell-off. Where it's going to be ended, I would say here, somewhere around here, we're just going to settle down for the sharp sell-off. This is monthly consolidation, and basically we are getting close below this trend line. This is not a good sign. I would say this is ugly sign for bulls, and this can shift to the bear market easily. However, I wouldn't say this is bear market, just because we need to have another lower low, another lower high, and then if the low which is made here is broken down, that would be a sign of bear market, and that could be multi-months bear market. And I would say probably end of the summer or end of this year, this bear market can last as well. So again, is this a good opportunity or bad opportunity? Again, it's up to you. If you're a trader, this is good opportunity to sell all the reps whenever we are getting a bounce, a rebound, so you can sell or short the market. But for investors, again, that could be a good opportunity. Just look at this way, the lots of stocks are getting a decent discount. If you are in the position, if you have good company, I don't want to say hold all the companies. This is not advice, or this is not a suggestion anymore. This is just the idea. Okay, you can take it and leave it, I don't know. But if you have good company in your portfolio, you can just average down slowly, not rush, no rush. Okay, so just slowly you can average down. But if you have a crappy companies, like I don't know, I don't want to name it, and then they're gonna come back to me. But if you're having a crap company that they don't make money at all, so it's better to sell them in any bounces. All right. Okay, going back to weekly chart for NASDAQ, here's the weekly chart. Still our box is there to wait for the support. This is, as I said, this is a 4 months consolidation. Nice wide range bar, continuation or follow through for the bull market. So we are going down to here, and that would be I would say a solid bounce here, probably something like this. So we are going to see 2-3 weeks solid bounce for another sell-off, probably to test here for the double bottom, or probably to test here this area, which is going to be 10,000 or the top of the COVID crash. This is a wide range bar, nice breakout, top of the ceiling. 61% retracement is going to be here, 69% retracement is going to be here. So again, level by level we can go down, but this area would be the opportunity for a bounce, and I wouldn't short market here. Probably we will go long here heavily, just because this is a good level for long as well. All right, so let's see daily chart as well, and then we can move to Russell and the Dow Jones area. So here is the daily chart. The daily chart, as you see, this is a very, very typical levels for the daily chart. Here is the first spike down, retracing back up to 61% Fibonacci, exactly 61.8 Fibo, and then coming down, stretching down, and this is going to be a good area. I would say 11,886. That would be a good area for NASDAQ. And here's the pivot. So that's why market is kind of reacting to this pivot. if this pivot break out, which I think it's gonna break down, and then 11,886, I said yes, 86 is settled there to see if there is any reaction, which is going to this monthly consolidation or daily consolidation prior this breakout. And this is the back test, so we are going down to test this area as well. Here is the Dow Jones daily chart. Dow Jones, we are going to see if this level is gonna hold or not. So if this one break down, then the next level is going to be 31,000, and I would say 29 to 30,000. That would be a solid area. But this one as well, this one is going to be a nice area. But again, this is a downtrend, so don't try to pick the falling knife just because if this one gets through, so you will see the market is going down to here as well. So wait for a trigger, wait for a bounce, or wait for the reaction. Probably just put a tight stop if you want a long here. Just go into the smaller time frame and see if there is any reaction to this area. Then that would be a good opportunity for you to go long. But again, I wouldn't long this market, just waiting for a solid level to bounce. And for the Dow Jones area as well, so if you go to probably weekly, you will see here this is the wide range bar, and this one is broken. We are getting below this trend line, we are getting below this SMA 100, which is not good, not good at all. This is actually ugly, and this can go down, as I said, 29,000 to 30,000. That would be a good area for see a solid support there as well. So okay, so Russell 2000. So Russell 2000 and just breaking through all the support area. So this one is gone already, and Russell is getting close. I would say this is very interesting. This is the leading now, even in breakout in the bull market and bear market. So Russell is getting close to top of the COVID. This is prior COVID, and this is COVID crash, and this is the bounce back, or I should say rally after COVID. Right now Russell is pretty close to the top of the prior COVID crash, and if this is the leading indicator for the other indexes, that would be ugly picture, to be honest, for Nasdaq and S&P. I'm not sure if the other one is going to follow or mimic the Russell exactly, but that would be ugly picture for Nasdaq. Just imagine if Nasdaq wants to test the top of the market at 2022 prior COVID crash. All right, but this is the one area that we are going to see Russell probably have a good support, which is going to be 1691 to 1713. That would be a good area for Russell to see a solid bounce, or at least the support for a couple of weeks. All right, if you like this video, if you like the research of this video or technical analysis, please smash the like button. If you have any question, please put your questions down there in the chat box. I will see you on the chart shortly. Have a good one. Bye-bye.